Mine the momentum of precious metals stocks for lustrous growth. As gold and silver prices reach multi-year highs, investors are targeting stocks that may capitalize on central banks' demand and potential Fed rate cuts. Franco-Nevada. It is right for investment with a PE of 35x and $2.3 billion in cash, poised for growth in a falling interest rate environment. Barrick Gold. It plans to boost production by 30%, leveraging low-cost Tier 1 assets and low interest rates, offering a stable 30% upside. Equinox. It aims to hit 1 million ounces of gold annually, with Greenstone Mine set to bolster margins and potentially increase its price. Let's dive in. Glittering gains. Here are the 3 stocks to buy as precious metals prices surge. Welcome to Timely Investment Research. Last week, gold and silver hit record highs, and investors are pondering which precious metals stocks may follow suit. Gold reached its highest level on record, and silver reached an 11-year high. While precious metal prices have retreated slightly since then, the general trend has been on the upside over recent months. Expectations also rise that this will continue for the rest of the year. Several factors are currently coinciding to push gold and silver prices higher, potentially driving precious metals stocks up on their way. Demand from central banks remains solid. That is despite higher prices, as banks seek to build reserves in an effort to reduce reliance on the dollar's dominance as a reserve currency. At the same time, interest rates are forecast to fall in the coming months as the Fed moves to ease monetary policy. Lower interest rates are typically correlated with higher prices for precious metals. With the Fed anticipated to cut rates later this year, 3 precious metals stocks, including mining and royalty firms, could surge. Number 1. Franco-Nevada. Franco-Nevada is one of the largest mining royalty companies in the world. It generates income through royalties without the operational risks faced by mining companies owning mines. Precious metals make up over 75.5% of the company's revenue. Notably, 82.8% of its royalties come from mines in the Americas. This reduces exposure to geopolitical tensions impacting transport routes like the recent Red Sea crisis. The company provides financing for new mining exploration, though its activities have been constrained in the previous 2 years due to rising interest rates. As interest rates are expected to fall, Franco-Nevada is one of the precious metals stocks that could gain from expanding into new markets. Franco-Nevada has no debt and over $2.3 billion in cash reserves available to expand its operations. The Franco-Nevada stock trades at a price-to-earnings ratio of 35x, which is low relative to its history. Analysts have a positive outlook, with an average price target suggesting over 17% upside from current prices. Number 2. Barrick Gold. Considering its ticker, it would be rather strange to leave Barrick Gold outside a list of precious metals stocks that could gain from higher precious metals prices. Barrick is the second largest gold miner in the world by market cap. Its value to investors offers stability in a growing environment over fast but riskier growth in smaller precious metals stocks. Barrick has been driven to increase production by 30% by the decade's end. It follows taking advantage of the low interest rate environment to buy up assets in the last couple of years. It focuses on so-called Tier 1 assets, such as large gold mines offering economies of scale and reducing costs. In fact, it owns one of the world's lowest-cost gold mines, Pueblo Viejo in Panama, where it is working hard to increase production. The Barrick stock trades at a PE ratio of 20.7x, below the average S&P 500 benchmark of 27.5x. According to the average of analyst estimates, Barrick's stock price could reach $22.08, a potential 30% upside from current levels. Number 3. Equinox Gold. Equinox is the last pick in this list of precious metals stocks. Currently in a ramp-up phase, the company operates 8 mines, and more are under development. Although it is not generating a profit, it is working to reach its production target of 1 million ounces of gold per year. The company recently acquired the remaining interest in Canada's Greenstone Gold Mine. Greenstone Mine is expected to begin production in the 3rd quarter and will be one of the largest gold mines in Canada. Analysts estimate Equinox will produce gold at a cost of $879 per ounce, less than half the current gold price. That offers Equinox the potential to increase its profit margin substantially. The sole analyst who has reviewed the company remains positive about its prospects. The forecast shows the Equinox stock price could increase to $7.30, representing a 31% rise from the current price. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.